Hello, good morning. This is Ayazuddin S Khan from Pune, Maharashtra State, India. So far, we have discussed three basic things about Income Tax Act, which each of you must know before going to our main topic, that is subject-wise income tax disputes and Supreme Court judgments on them. So those three things were: first, income tax is a central act, first thing. Second thing, the definition of income, what is income. And third one was person, who is person, types of person. And now today we'll have discussion on gross total income. So let us enjoy the this term, very important and having practical importance. So please note this carefully. This is very, very important term and practical importance it has got. Gross total income. When you look at this term, gross total income, and think over it for a while, what is this term, gross total income? And try to understand it. I think you will naturally have, there will be questions. There will be questions in your mind. And the questions will be like this. Gross total income. Why not only total income? Or why not only gross income? Why gross total income? Such types of doubts you may get in your mind. Okay, so let us move with the term as it is. That is gross total income, and at the conclusion of this lecture, we'll have some solid idea about this term, gross total income. So wait till the time of conclusion of this lecture. Okay, now we'll move along with this term, gross total income. Gross total income is just like a shying woman. Shying woman does not show her full face. A shying woman does not show her full face. In the same way, this gross total income also does not allow us to get the clear idea about this, about the face of this term, what it exactly means. So as I told you, we'll have some good idea about this term at the end of the lecture. Now this gross total income we have to take into account to get to this gross total income, GTI, in short GTI. We have to take into account the total of all incomes under 5 heads of income that we have already learned when we were talking about this, income. So what are those 5 heads of income? First is income from salary. Second is income from house property. Third is income from sale of your property. Fourth is income from business. Then last one, fifth one is income from your interest income or dividend income from your your FD, fixed deposit you kept in the bank. So these 5 heads of income, if you take the total of these 5 heads of income, you will get the gross total income. Okay, up to this I think there is no problem in getting what I am telling you. But see, this total of 5 heads of income make the GTI, gross total income. That is a big statement. But our law-making body, Parliament, is very, very kind enough to say that, to say to the taxpayer that they say, don't take your full salary to include in the gross total income. Then what? We are giving you some concession. We are giving you some amounts that you reduce your salary income by these amounts so that your salary will stand reduced and your tax amount will be also less. That way, government wants to give concession. That is the symbol of bounty of the Parliament or law-making body. We must thank them for giving such concession. So first thing, we learn salary. So what type of concessions that legislature has given to us? This is first concession is there to reduce your annual salary income is rupees 50,000. Rupees 50,000, we may call it as standard deduction. Rupees 50,000 is the first amount that you can, with this amount, you can reduce your annual salary income. Okay. Then what is the second item of concession or second item of benefit the law-making body has given to taxpayer? The second item of concession or benefit is your professional tax, or you may call it employment tax. So the employment tax or professional tax, whatever amount you actually pay annually to the government concerned, that amount will also you can reduce from your annual salary. Okay. So this employment tax and professional tax, this subject falls within the list of within the state list. As per our constitution, state government can have the law asking the people in the state who are employed, asking their employer to deduct professional tax as per the what you call income slab given by us, and you remit that amount to us. It is like this. So this professional or employment tax is levied. State government concerned levies this tax or takes this tax from the employees who serve in its territory. Okay. So this is the second concession or benefit. Now third benefit is your entertainment allowance. Entertainment allowance, this amount that you can reduce your salary, one who gets this entertainment allowance, that officer concerned, may reduce his salary income by rupees 5,000 rupees. So only rupees 5,000 is allowed to the employee or senior government officer. Remember, senior government, this is given. This 5,000 benefit is given only to senior government officer, underline government officer, not private officer or officer working in private companies, public company, private companies. So only government officer gets this entertainment, because this he can use for offering tea, coffee, snacks to the people who visit him on official work. Okay. So that is why this amount is given to that senior government officer who has to entertain the guest. They are all VIP, normal, naturally. So these three amounts that taxpayer can, with these three amounts, a taxpayer can reduce his salary income. You followed? So these reducing amounts are, or the benefits given by the legislature is like this. First is 50,000. You can reduce your salary by this amount. Then second one is employment or professional tax that your employer recovers from your salary. So that actual amount, annual amount that that is recovered, that you can reduce salary. You can reduce your salary with that annual payment of employment tax or professional tax. These two. And third one is, as far as senior government officer concerned, he can reduce rupees 5,000 from his salary income. So these three incomes, if you what you call use to reduce your salary income, then net income, what net income remains, that becomes your first item of gross total income. Just remember, this is not full salary income. Not full salary income one has to take as first item of your gross total gross total income, gross total. This is not the full salary one should take. Only after deducting, only after reducing your salary by these three benefits, 50,000 actual employment tax paid and 5,000 entertainment loss. Once you reduce these three items, what you get or what remains is your salary income from salary. These forms or these become the first item of your gross total income. So as far as salary is concerned, what is the gross total income? So this is the gross total income, as I just now told you. After cutting these three items, what remains is first item of gross total income. Now we'll move to income from house property. So law-making body, what concession, what benefits, what bounty it has shown to taxpayer as far as income from house property is concerned. That also interesting. And we must also thank legislature for giving such concession and benefit to the owner of the house property who get the annual rental income. Okay. So legislature has given whatever annual rent you get, don't take that annual rate as your as your gross total income. Don't take that. Then you reduce it. You reduce your annual rental income by the benefit we have given to you. And what are those benefits? So benefits are like this. First benefit is 30% of the annual rent. 30% of the annual rate, you reduce your income, rental income or income from house property by 30%. Suppose 100 rupees your annual rental income, reduce it by 30%. That means from 100 you reduce 30 rupees. So balance is 70, isn't it? Okay. So legislature has given this good concession to the earner of the person who gives his property on rent. The first deduction is your 30% of the annual rental income. That is the first item for reducing the salary, for reducing your income from house property. Then what is the second benefit legislature has given to taxpayer? The second benefit is that full amount of interest, any amount of interest that you paid to the bank for taking loan from them. So whatever interest you have paid to the bank, annual interest, annual interest you have paid, that you use to reduce your income from house property. This is the second concession. And but this concession, this any amount of interest or paid, actually paid, that you can reduce. But one condition is there, simple, that is one can easily fulfill. That condition is that you have to go to the bank after close of financial year and ask them to give me interest, how much you recovered, how much I paid as per your record, how much I paid interest to you for taking loan from you, and how much principal, how much principal is there, how much principal I paid during the for this full financial year. That way you show in the certificate. It is called interest certificate. So you have to go to bank and get this annual interest certificate. That is that is the basis for what you call claiming this any amount of interest for reducing your salary. Okay. So these two benefits this we have got from the legislature or from the parliament. We are thankful to them. The house property, income from house property, and the benefits as given by the legislature. Then after reducing your salary by these two, after reducing your what you call income from house property by these two items, what you get is the net, what you call net rent, net annual rent. That you can take as the second item of gross total income, that is GTI, second item of gross total income or GTI. Okay. Now one point you have to remember here, rent, when I say rent, and from that annual rent, you have to reduce government, that legislature says you reduce your rental income by these two items. What is that rent? What actually we have to take? Whatever rent, annual rent we have got, that we have to take, or some other figure we have to take. But just note it, as that what you call Act says, that whatever annual rent you get from that amount, from that annual rent, you reduce that annual rent by the municipal taxes you actually paid to the municipal authorities. So that amount, municipal tax amount, that you reduce from your annual rent, and what rent remains, that that you use for reducing that you can from that amount you can reduce your that income from house property or that rent amount by these two benefits, that is 30% of your rent, annual rent, and any amount of interest, that too. So this is one thing. Suppose, now we'll go further about this income from house property and the concessions or benefits given by the law-making body. Suppose this is about the property which is on rent. Suppose there is there is property which is not on rent, but you are not given on rent, but you are using that property for self-use. You are living there with family, isn't it? So there is no question of what you call getting rent for that property. So in such situation, what are the benefits given by the legislature or parliament? What are the benefits given by the party? There is no rent at all for you. But see the big heart of the legislature. They say, okay, don't worry. You take this also. We will give you benefit, and they have given the benefit, interest benefit they have given. that from your you are not getting any income, but you had that property by taking loan. So whatever annual interest you pay, that is again on the basis of the interest certificate that you get. You go and get the you go to bank and you get that interest certificate annually after close of financial year. So that becomes the basis for claiming interest. But here legislature says we are giving, though you don't have any rental income, we are giving you benefit. You reduce your this what you call rental income, which is now 0 here, by 2 lakh rupees maximum actual amount of interest that you pay during for the year, or rupees 2 lakh, whichever is less, whichever is less. So then in such situation, naturally what will happen? You will get income from house property. Here in this case, where the property is not on rent, or where the property is self-occupied, they say, when the property you are using or you are living with your family. So in situation, the because rental value is 0 and government concession is 2 lakh rupees in the form of interest. So if you reduce your 0 to by this 2 lakhs, so you get minus figure. You will get naturally minus figure, that is minus 2 lakh. Okay, this is the house property, and this 2 lakh rupees. What is the use of minus figure? This 2 lakh rupees. There is no concession, isn't it? We see on the first side, one feels don't understand this type of concession, minus figure, वगैरह. You will learn in due course of time. This minus figure you can adjust with the other income. Other income is 5 heads. Suppose you have got income under 5 heads. So this minus figure you can use to reduce any income from the any income from the other 4 heads. Other 4 heads. Naturally, that income of that particular head, where you are adjusting this minus figure or reducing that income by this minus figure, automatically that figure will come down and you have to pay less tax. So even this minus figure also helps us. So again we must thank the lawmaking body for this concession income from house property. Now this is second item of income, and that rental, you remember, rental, when your property is on rent, and after reducing your rental income by this 2 concession, when property is on rent, that is 30% of annual value of rent, and this minus and there's full amount of interest. After reducing that, what remains is the second item of your gross total income. So this pattern you note, net amount of salary becomes first item of your GTI, gross total income. And as far as income from house property is concerned, this rent minus 30% of annual value, or 30% of your annual rent, again minus your full amount of interest, then that net amount becomes the second item of your GTI, gross total income. So only net comes to form the net income under this head comes to form the GTI, gross total income. This net income goes to form this GTI. GTI, these 2 net incomes make the GTI. Now we will go, another 3 things are remaining. That also, there also net income will form the GTI. So this 5 net income will make the GTI. GTI as we understand and as this term, gross term suggests. So now then third we'll go to what you call income from sale of your property. If you sell your property, and naturally you get more amount because the property you must have purchased in the earlier years, before 10 years, 15 years, 20 years, whatever it may be, and you get good rate when you sell the property in 2022. So you sold your property in 2022. So naturally there is profit for you, or that your sale proceed is greater than your sale price is greater than the purchase price. So that difference is called capital gain or profit from sale of your asset. So what are the concessions here or benefit that Parliament has given to taxpayer? So here also there is benefit for the taxpayer. So we'll just discuss this benefit. When you sell, suppose you purchase the property, suppose you purchase the property in the year 1988 and you sold that property in the year 2022, that is purchased in the financial year 1988 and sold the same property in the financial year 2022. So if we think about the capital gain or the income from the sale of property, you will find there is wide gap. There is wide gap in these two figures. Property purchased in 1988, you must have purchased the property for very small amount, or that time, during that time, as compared to the present time, that amount looks very small. If you now in 2022 you consider that amount may be. Suppose you purchase that property in 1988 at the price of 1,50,000, and in the year 2022 you sold that property. So you sold that property for 30 lakhs, isn't it? Example, 30 lakhs. So see the gap. See the huge profit you are making on sale of your property. 30 lakhs minus 1.5 lakhs or 1,50,000, the profit is 28,50,000. Profit, they say gain, capital gain. This profit from sale of asset is 28,50,000. On this you have to pay tax, isn't it? So this is a very big amount. So legislature has noted the pinch. You noted the pinch. You will get this pinch because of the heavy taxation on this profit. So they have come forward, shown mercy on you, and they also given you good concession. What they say, though your property, for example, your property is the purchase price of your property in the year, suppose in the year 1988 is 100. Your property purchase price in 1988 is 100 rupees, for example, and the price in the year 2022 as per the government record is 231. Followed. Price in 1988 is 100 and price in 2022 is 231 as per the government record. This is actual, it is actual. Legal figure I am talking about, not imaginary figures. So then there is jump of 100 and you that property, the value of that property is 231. So the government says, you work out your present value of your old property in this way. Suppose your old property, the property that you purchased in 1988 is 100. So present price of that property is 231. And suppose your property is 1,50,000 in 1988 you purchased, then what is the current or present value in 2022? So that way you have to work out the what you call increased value of your old property. Okay. So this is the benefit the legislature has given to the person who sells his property and who is required to pay the tax on that profit. So what is this benefit 231 that you take instead of 100 you take 231? What is this benefit? It is what you call this benefit 231 as the legislature says, we are giving you benefit and that benefit is like this. Though you purchase at cheaper rate as compared to the present rate, your property cheaper rate, so naturally it is very before this sale figure of 2022, that figure looks very small. The figure of purchase amount in the year 1988, that figure looks very small before this big figure of sale in 2022. So increase that figure, increase your purchase price by this 231 in this formula. If price is 100, you take it 231. Your price is 1.50 lakh, 1.5 lakhs in the year 88, you take whatever that multiplication comes, that you have to take. So this type of concession they have given, and there is logic, there is reason behind giving this concession. There is no what you call just government wants to give concession. It is not like this. They have given something. No, their scientific basis is there. They assume, they think 1988 to 2022, what is the increase in the cost of capital, that is interest? What is the increase in the cost of material, that is cement, steel, bricks, etc.? Then what is the increase in the wages, cost of labor? What is the increase in the wages of the labor during this period, 1988 to 2022? Naturally, there is increase. Lot of increases is there. That is government agency. Government agency measures these things. Increase government agency. It what you call measures this increase in the these prices, cost, capital cost, increase in capital cost, increase in labor cost, and increase in the material cost. These government agencies officially they measure it, and they every year the government publishes that figure. How much increase is there in the year 2021? 2020. This started from 2001, April 2001. Now, on this coming June 23, you will get another figure for showing the increase in the these prices of construction. Okay, so this way, this increased value, as government gives us concession, that increased value, this one can measure with this formula. As I told you, for 100 rupees this much, 231 if property sold in 2022, then whatever purchase price, whatever your purchase price is there in 1988, for that how much increase is there, or what is the value, current value of your property. Like this, you get that value. So, and then that value of your old property, you reduce your profit by this sale price and purchase price. Purchase price means not the 1.50 lakhs in our this example we discussed, not that purchase price, but the increased price as per the government formula. That you reduce from your sale price and increase sale price that, and what remains is your profit income. So that will form the what you call third item of your what you call GTI, gross total income. That will form or make the third item of gross total income, net income, net income. So first salary, net income, then income from house property, we have taken net income, right side, and then third is this profit from sale of your property. That is third net item we have taken on the right side. So we so far our three net incomes are there, and they have gone to make the GTI so far. But it is GTI yet to be totally formed. It is partially formed by these three net income. Now two another net items are remaining that we will discuss now. That is income from business and income from your interest on FD and dividend from your shareholding. These two things are remaining that we will discuss, and what are the benefits the legislature has given for these two heads of income we will discuss. So now fourth one is income from business. As you know, income from business means profit, net profit, isn't it? So here government has allowed number of items of expenditure, many items of expenses government has allowed, and that is also symbol of what you call kindness on the part of legislature or parliament. We must thank them. So many items of expenses that government sends, you reduce your profit, net, your total profit, gross profit by these expenses, and you have the net profit, and on that you pay the tax to us. It is like this. This concession is like this. So really, it is good concessions and principle of what you call to get this benefit of expenses to work out our net profit. That expense, that particular expense or total expenses must satisfy one simple condition, that whatever you spend, that should have very, very close connection with the business activities, production activities, profit-making activities. Then only this expense is allowed. So remember this point. Otherwise, this income tax officer is there because everybody, like the last day of judgment, all human beings have to stand before the Creator like this. Finally, we have to stand before the ITO. When you give him what you call your income and say, I have paid the tax on it properly, then his reaction we have to see. He will see all these things. Okay, expenses you incurred, okay, but whether that was necessary for carrying out the business activity, whether that was necessary for profit-making activity, like this, he will ask the question. If it is not related to profit-making activity or business activity, then that expense becomes your income. That he will not allow you. Once it is disallowed, automatically your profit will go up. your net profit will go up. Okay. So this way concession is there for as far as income from business is concerned, and what you call last item is interest and your dividend from shareholding and family pension. There are a number of items under these heads which we cannot put under these 4 heads of income. Then legislatures or taxation law says you have put under these sundry heads, that is other sources, income from other sources, that is technical word used by the Act, Income Tax Act. So these prominent items or important items under this head of income, other sources, income from other sources or sundry incomes, that is the prominent item. Important items are interest on your FD and dividend from your what you call this shareholding. There are income from mutual fund also. There are number of items. Then family pension also there. But important items, it is better to keep in mind important items, recurring items you will find every time. Everywhere people put surplus money you have got, you simply keeping with you is of no use. So people put in the bank surplus money and they what you call get the annual interest, or they get the return on your shareholding as technically called dividend. Okay. So now what are the concessions legislature or parliament has given to those people who have got this sort of income, interest income and this what you call dividend income. So concession is not much, but something is there. They say whatever this bank, your bank where you put the what you call, you have got your account there, then whatever charges they take for collecting your interest amount or dividend amount, so those charges you can reduce from your interest income or dividend income. As far as family pension is concerned, the family pension means not regular pension. Regular pension and family pension, there are two different things, and difference is very, one can explain in a very and easily. One the government servant, he or she, if he is alive and taking pension monthly from government, so that pension is called regular pension. Once the person, one the government servant, who he or she dies, and then she or he doesn't get the pension, then his or her successor gets the pension. So the pension that successor gets is called family pension. So legislature is also bountiful, very bountiful in giving the concession to reduce this family income from family pensions, annual family pension, by this amount. And what is that amount? Amount is, it is like this. Government says, reduce your family pension by 33.33% of annual family pension. How much? 33.33% of your annual family pension, and or rupees 15,000, whichever is less. This is your concession. This is concession for those who have what you call income from family pension, that is other sources income. So after reducing this, you get net amount of interest or net amount of dividend or net income of family pension or any other item. There also some discussion, what you call concession is there, and only one has to take the net amount of that thing. So for our example or discussion, we have taken these 3 items just to understand the principle in a simple way. So after reducing your dividend income, interest income or family income, if you have got, then what remains is net income under the income head other sources, sundry or miscellaneous sources. So that now we have got 5 net items. We have got now 5 net items. You take the total of these 5 net items, then that total is called, or that total is your gross total income. Followed? It is like this only. Now, interestingly, now the first, initially at the time of beginning of this lecture, I told you, this GTI is just like a shying woman, doesn't show full face, isn't it? So, we get number of doubts or questions in our mind when we look at this term closely and try to understand what is it, and why not gross income, why not total income, why gross total income, like this. Now, I have explained you the 5 net incomes. The net incomes under 5 heads of incomes make the what you call gross total income. Now you compare this. This is the what you call solid knowledge. Gross total income means the net income under each head of income, under each of the 5 heads of income. That becomes, or that makes gross total income. Now you compare this with the definition, or with the term gross total income, and see the what you call which which way we have to understand this gross total income. If suppose still you don't find any link or relation of this what you call the thing we have arrived at, this net 5 nets, and that makes the gross total income, then still you cannot link or find any link with this term gross total income, then it is better. It is better. What legislator is telling, you say, you turn your face to that thing, gross total income. Yes, gross total income, it makes no difference. But you have got knowledge, solid knowledge you have got. Gross total income means these things. You will explain to your friend or anybody who asks you this question, can you tell me or can you explain me what is gross total income? You will tell him in detail like this, what I told you and what I think you must have heard what I told. These nets of 5 make the gross total income. This is what I want to say about this gross total income, and this is the 4th what you call basic things which one must keep in mind while what you are going into detail to our main topic, that is subject-wise income tax disputes and Supreme Court judgments on them. The another interesting point, I don't want to what you call make the lecture longer, because people, that word that is, they say people don't have time. They are time poor. This is very good term I learned from the media. Time poor. Time poor means people, in the present generation, people don't have time. People are normally people are poor because they don't have money. But here they say people have a lot of money, but still they are poor, not because they don't have money, because they don't have time. So they call it time poor. People are time poor. They don't have time, so don't make long video, make short video. And now you tell me how to make short video when the topic demands this much discussion. It is up to you to think whether what one should do, what a person who wants to share his knowledge with the audience, what he should do, how he can cut short his lecture. That is a great problem, considering the what you call demand on time. Demand on time. Everybody is busy, no time, as some say. People are time poor here in this generation, new generation. Okay. So this is all about GTI. Then we will proceed to our total income in the next lecture. Until then, goodbye, have a good day, and thank you very much for bearing with me. Okay.